Welcome to the Mid-Market Edge podcast, where we uncover operational insights for private equity-backed portfolio companies. I'm your host, Kevin Bonfield, and over the last 30 years, I've had the privilege of working with fast-growing entrepreneurial teams, helping them scale, tackle challenges, and seize new opportunities. On this show, we'll talk to industry experts and seasoned leaders who will share practical strategies to drive growth, boost efficiency, and create value in the mid-market. Get ready for an insightful, engaging conversation that dives deep into the real-world issues facing your business.
I want to welcome Sagar Pandya to the Mid-Market Edge podcast. Sagar and I have known each other a little while through the Entrepreneurs Organization. And as we move through this series on intelligent acquisition integration, I know that Sagar has some real life experience of having gone through this as a company that's been acquired. And he's also right in the middle now of launching his next venture, which is focused around AI. So I thought it'd be great to have Sagar come join us so that we could have this conversation. Sagar, welcome.
Kevin, thank you. It's always a pleasure having a conversation with you. And it's just an exciting time right now in the world, given the era that we live in with technology.
Yeah, it really is. So maybe you can give a little bit more of your background, Sagar, so that everybody knows who you are and where your focus is.
Absolutely. So I consider myself a serial entrepreneur. I've been in the technology space for about 21 years now. I started my first serious business right out of college. That was an IT and cybersecurity consulting company with one other partner. We scaled that to about 35 employees, and we had an opportunity to exit to a strategic buyer a couple of years ago. So I had a front row seat with a fire hose of information going through M&A as a seller, being tucked into a much larger platform. My experience also now in the last few years has been this conversation around artificial intelligence, helping organizations take advantage of the great disruption that AI is doing from workflows and processes and really make it actionable and relatable to the C-suite inside of the boardroom. And I sprinkle a little bit of cybersecurity into that as well, because we know AI agents with unrelented access could cause damage to organizations. So it's just been really interesting to see the shift in everyone's mindset these days.
Yeah, no, that's fantastic. So let's dive in. You said that you built this consulting company that was focused around cybersecurity, and then you sold. Congratulations, you sold to a strategic buyer, and you stayed with the company for a period of time after that.
I did. Yeah, I stayed about a year and a half, just because, as we'll talk during this episode, integration was a very important cornerstone of that transaction. And then just great people, great culture in the organization. Learned a lot, right? Being in a much larger organization, an executive versus being an entrepreneur. So I really wanted to learn what the experience was like, staying on for a little bit of time.
So how did that conversation happen? I mean, you're going through the process of selling your business, and then they're asking you, we'd like you to stay on for a while. As an entrepreneur, there's obviously a tension there, right? Because you want to work for yourself and probably not really anybody else, and they're asking you to be a part of this team. So how does that conversation happen? How did you get excited about it?
Yeah, and I think going back a few steps before we even got to a point where we were in an LOI and go through the transaction process, we, as a successful service-based business, like many of you that are going to be listening to this episode, you probably get emails on a weekly basis from folks that are interested in either investing, looking to, entrepreneurs that want to acquire businesses, right? Or investors that want to invest in the business to help it grow. We had those on a weekly basis for years. Eventually, one of them caught our eye, who's been chasing us for, it was actually the corporate development team at this strategic buyer, right? So not a broker, very different experience. Finally, we said, all right, we're going to respond yes and say, all right, what's the next step look like? And they chased us probably for 2 or 3 years before we responded to any email, right? Responded to it. And we were lucky that when we went to market, we had 17 interested organizations that wanted to acquire us. About half of them were pure PE plays, which was of no interest to us because as much as PEs like to say they know industries intimately, it's really hard for them to get deep without the experience of the lived execution that me and my partner had.
Mm-hmm.
So out of the other half, there were 9 strategics. We went through a dating process, right? Through that dating process, though, you learn a lot about organizations because of the culture and the leaders who show up, right? Are you having conversations with suitors that are just sending their hired guns to do these conversations, or are you having an entrepreneur to entrepreneur conversation? And Kevin, given that we've met through EO, you know what it's like to have real conversations with people, not just ask them how's the weather and how's the kids. You want to get to that root level. So in those conversations, that's where we started thinking about, okay, we know we're entrepreneurs. It's really hard to employ us, but there seems to be something here, right? And a couple of the acquirers had mentioned, hey, this is our culture and this is what we're all about. And I think about one of my really good friends in the Chicago chapter of the organization that you and I both are a part of. He always reminds me of that African proverb: if you want to go fast, go alone. If you want to go farther, go together. So I started thinking about that during the IOI process, and eventually, right when we signed the LOI, my partner and myself said, let's give this a shot, right? Start again and build from zero, right? And have to go through what we went through when we started this previous company? Or is this a rocket ship that we could plug into that gives us 2 levels up, right? More brand equity, more buying power, more knowledge, right? More community. The company that we sold into is 1,100 employees, so it's a mid-market size business, right? Just the scale there, very different than being a much smaller organization. So that answer, right, to, hey, what was it like and how did you come about to that? That started way back when we were just referencing some emails that people were sending us that they were interested in acquiring our little business that we built. So that's kind of where it started. We wanted to at least give ourselves that chance to experience what it's like being in an already existing fast-growing organization. And it was a tremendous experience for me personally to have to go through that, because then I saw both sides of it as an entrepreneur, as a hired gun. It was really great to have both hybrid experiences under my belt.
That's fascinating, though, that you were thoughtful about what did you want your experience to be, right? That you could have gone down the private equity route where you were the platform, right? And that would lead to a certain set of experiences. Or you could go and you could be a part of a larger organization, and that was a different set of experiences. What was it that caused you to go down this route where you said, we really want to be a part of a bigger organization?
What was really important for us in all the potential acquirers that came into our funnel, really major things for us. Number one, I'm a big believer in core value fit. You have to be aligned, right? And we learned that in the organization we're a part of. Core values are everything, because it really defines the culture of the organization, and it really defines how everyone is rowing in the same direction. So that was number one. Yeah. Number two, we were a Chicago-based organization. Primarily, 99% of our staff was in the Chicagoland area, within 30 minutes of downtown Chicago, right? So for us, having a strategic acquirer be part of our community, understand that the Chicago Bears can be very disappointing every Sunday, except right now, as of this recording.
Except right now.
They're crushing it, right? So we needed someone that not only portrayed the same core values of connection, transparency, and supporting each other, but we also wanted folks that understood what it's like to drink an ice cold glass of Lake Michigan water, right? So that was important. On the PE side, these were a bunch of investors, which we're grateful to have conversations with, but they were looking to enter the Chicago market. It would have put a completely different set of pressures on myself and my partner at the time to be the pioneers of this new market that they wanted to create. And the deal structure for those conversations was more so some cash, some equity, but a longer earnout, right? For 36 months of time being an acquired entrepreneur, which I didn't know what that would have led to. So there was a little bit more risk on that part of the conversation. On the flip side, a couple of the suitors that were really close, right? Ultimately, the one we decided to go with were both, Chicago-based organizations with hundreds of employees locally. They understood. And Kevin, it gave us the ability to plug into an existing rocket ship, right? So instead of the burden and pressure being on myself and my partner to be the pioneers alone in this new market and have to build from essentially another startup in a large organization. And then also our staff, right? We have a bunch of employees. what's it like for them to be part of a large organization and have more, sales folks or account management folks that they could plug into immediately and get access to further their career. And some of them went on to take promotions and do really great things at the acquiring company. So it was a really, really big decision, right? Do we want to just get the highest valuation, right? And move quick and be done with it and just have to operate? Or do we want to, see what's out there to give our staff also an opportunity? And we wrestled over that decision for a long time. It just, we didn't have anybody to tell us right or wrong. This is AI wasn't really a big thing just a couple of years ago. You're not asking ChatGPT, how do we do these deal making things? It's more gut. It's more intuition. So for us, it was more the people that were going to be attaching our boat with, and how do they view their customers? What type of cultural things are important to them? And are they part of our community so that we can all relate and do these really hard things together with people that understood us? That's really ultimately what helped us make the decision. We actually didn't choose the company that we went with. They were not the highest check or the end result, right? It wasn't the highest multiple. It wasn't the highest price. But for us, it wasn't all about just what's that dollar figure that's going to be sent our way. There's so many other things that are important. And ultimately, I think the decision we made was the right one at the time.
That's awesome. So the piece that you talked about there, the strategic direction and being clear, like even within the idea of I'm going to go and join another organization, knowing what your role is going to be in that future organization, what the expectations are, and the commitment that it's going to bring, seemed like an important thing that you learned through this process. And then the comment that you made at the end about we didn't take the largest check, and it sounded like part of that was we wanted this to be the right place for our team to also go and grow and flourish. I mean, that must have been a big part of your culture to have put that as something that was that important.
Super important for me, and I'm a big believer in CEOs, C-suites, company founders working for their teams and their teams working for the clients. So I think organizational charts need to be flipped completely upside down. I am at the bottom of the org chart. I work for my team. I remove barriers. I block and tackle. I listen. I elevate, and I support and help them evolve and grow, right? Because if I can do that for them, they show up to work happy. They're going to work their absolute hardest to deliver for customers. And because of that, customers are going to renew contracts and going to spend more money with us, right? So it was very important for us to find the best home we could for this massively disruptive change that could have happened for our team, right? And they don't know what it's like going through a process and how many decisions and how many things that have to go perfectly for the deal to close. They just see the end result. This day we're company A, now we're company B. What does that mean for my job? What does it mean for my family and my well-being? How is my pay going to be affected? So many things that have to happen behind the scenes. So when we made the decision ultimately to exit, these conversations around where we as the founders are going to land, that started months, maybe I would even argue years before we even got to the LOI stage. And what I'm really, really grateful of in these conversations with our strategic acquirer was we were very transparent. There was nothing like hidden, right? We're not just saying things just to people please. We were being very vulnerable and very open. And it was very interesting to go down that path so early. And that's the reason why we were able to land in these executive roles after, is because we addressed and had these conversations prior. And it wasn't something where, Kevin, we signed the purchase agreement and the next day they're like, well, here's a role that we found for you, and here's the title, and here's going to be your job duties, roles, and responsibilities, and meet your new boss. Those conversations were had prior to us even signing the letter of intent in the first place, because that decision-making was absolutely part of the decision why we went forward with this specific organization.
And was this you talked earlier on about this idea of entrepreneur to entrepreneur conversations? Like I've seen this with a couple of my clients where one of the things that they do, I'm thinking about one in particular, but one of the things that they do really well is that they're acquiring is that they have one of the original entrepreneurs who's still part of the C-suite, and he goes and talks to them and tells them about what it's like to come and join this company. It's almost like, hey, I speak your language and I can explain to you why it is that the water's warm and you should come on in. So what were the conversations like as you were talking entrepreneur to entrepreneur?
They were exactly what we needed at that time. Get us off the ledge, hold our hand, tell us it's going to be okay. Because as a first-time founder and first-time exit, it is deeply personal and emotional. This is your baby. You worked day and night to create this from nothing. And I took that for granted. I thought very transactional, right? It's a business, it's an asset, it's fine, right? But as you've seen, Kevin, when we've talked about this, and I post a lot about this on LinkedIn, this vulnerability and transparency, it was deeply personal for me. I cried the moment we signed the purchase agreement and said our goodbyes, jumped off the call. I cried for 5 minutes because it was such a massive, massive achievement, right? And there was a lot of uncertainty, and something you've known for 15 years that you did 80 hours a week, 15 years in a row, 7 days a week, to now go to zero. So those conversations with other entrepreneurs, deeply personal, helped us get off the ledge. And I know for folks that are watching, you're going to be hiring a bunch of really smart advisors, Harvard MBAs, and, capital folks, and you're going to do your quality of earnings and accountants and lawyers and all these really, really smart people, which I was grateful for. But none of them had built and founded and sold a company. So they couldn't understand the emotional toll that you're going through. So we had an opportunity before we signed on the dotted line. We spoke to a couple of the acquired founders that were still in the organization. One of them was actually a competitor of ours that we're super friendly with, right? In the same exact industry. They were acquired a year before we were acquired. So that was a really important conversation because we needed to give that reassurance and not just have these well-compensated advisors in front tell us, everything's going to be great. We needed the true, take the mask off, let's get to brass tacks and tell me what went well and what did you wish you could have changed had you go through this process again. And those were the most important conversations because there's no one else to tell you, Kevin, if it's right or wrong, right? You just go through with it and hope for the best. So those were extremely, extremely important for me personally from an emotional standpoint.
Yeah, it's fascinating to me that when I talk to investment bankers and a number of private equity companies, they will say, "Oh, well, we're going through a process, and we're trying to work out who the high bidder is." But what you're saying is that in some of these cases, it's not about being the high bidder; it's being in the ballpark, but then having a value proposition which is attractive for the entrepreneur to come and join you.
And 110%, what you just said, the advisors tell you, here's what needs to happen. Advisors are really good with doing deal structure, the technicalities, right? Making sure things flow correctly, having a well-designed integration process so that you don't have things slip through the cracks. You know what I didn't get out of that? Was the 7 months I spent having dinner with my wife every night, having a blank stare across the table when I'm thinking about quality of earnings or financials or something that I may have missed in communicating during our sale process, or how our leadership team has no idea that we're going through everything and they've been complaining to us to hire staff, but we were avoiding it because we wanted to maintain adjusted EBITDA and valuation and not disrupt it because we're on a monthly reporting process now due to the LOI requirements, right? Nobody talked to me about that. Nobody talked to me about, hey, it's 2 a.m. on a Sunday night going into Monday and you have a very important investor call at 8:30 a.m., but you're just very anxious and you can't sleep. No advisor is going to tell you, okay, well, here are the things you need to do to alleviate some of that anxiety, some of that stress. So that's why I said earlier in my question and my answer was, this process was deeply personal to me, and not being present for 7 months of my marriage while I'm going through a sale process, that's time I'm never going to get back. Of course, me and my wife were fantastic, and we moved through it together, and she was an anchor for me, right, and helped me get through everything. But no advisor is going to tell you how to have a conversation with your spouse when you're mentally unavailable, emotionally unavailable, unable to sleep, missing family events and other things in life. Life gets put on pause when you do this stuff. And I'm grateful for my partner in that business because we traded off. Sometimes I'd be doing the deal stuff because it was just my turn and I had the mental capacity to show up for a Zoom call full of 9 investors grilling you on your financials. And my partner would be running operations in the business, making sure we still keep our foot on the gas and service customers, right? And in some weeks we would flip. I would jump into the operational seat and help our clients. And my partner, Isaac, he'd be the one doing the deal making because that week his mental capacity was much more higher than mine, right? So all these things, and I share a lot about this online, we don't share enough about the mental toll M&A takes for first-time founders, right? First-time exiters.
Right.
And that's why it was deeply personal. And having these conversations with advisors, while they were helpful, they didn't do anything for me from a personal level that I took completely for granted when I had to go through the process.
Yeah, and then you get to and then you get to the close, right? And you've signed, and the response on the acquiring side typically is, "This is fantastic. We've left the start line. Now it's time to run." And you're looking at it going, "I've been running for the last 7 months to 15 years. Can we just take a breath and then we can get going?" Is that how it feels?
Absolutely. M&A for first-time seller completely drained the life out of me. And my advisors had told me, which I'm grateful for, they said, listen, you're going to be on a high. You're going to be excited. Money's going to hit the bank. You're going to have all this adrenaline, right? But you have to take time to process. And I thought, Kevin, being a Superman, healthy guy, I'm like, all right, a couple of weeks or 1 week, I'd be fine.
Right.
It took me 2 years. I'd say I just recently probably got over it, maybe in the last couple months. And there's this paradox of athletes. I read this study, I'm sorry, I can't name it right now, where when you're in the trenches of being, in this race, let's say for Super Bowl, right? Football, you're in the Super Bowl race, the adrenaline and how much stress your body endures to be able to perform is so high that you're in a flow state. Everything works. You're able to run, catch, no injuries, nothing. And then you win. And then it's the off season and you're walking somewhere and you may like twist an ankle or something may happen because you've drained yourself of all that stress, all of that cortisol, all of that adrenaline, right? I totally felt that for the 6 months after, once we signed the LOI, I had a couple weeks off because it was December of 2023. So we took a breather, did a little travel, came back, jumped right into 600-mile-an-hour integration work where we had 100 and some clients at that time. We had to tell each and every one of them, hey, loved your business. Thank you for everything. We've sold our company. Here's what that means. Now you're like a complaint or customer service department for 100 different clients. Some of them are like amazing. Others are like, hell no, right? So jumped right into that. And I never had an opportunity because I took 2 weeks off, jumped into 6 months of integration. And then I did a role there, an executive role for a year. Where in that process, Kevin, did I get a chance to process this major win that we just were able to accomplish? And our deal fell through twice. Deal died completely. Right. And everyone that listens to this knows it's not done until you sign and the money's in the bank. The deal fell apart a couple times. So to pick it back up and run with it was just an incredibly, incredibly taxing process for sure.
Yeah. So talk to me about the integration. I mean, it sounds like as part of this work, the discussion happened on an ongoing basis that said, this is what we expect, this is what we need, this is what the role is going to look like, and so on. So what was the integration phase like? What was helpful? Where were the challenges that you had to go face?
I think what the acquiring company did extremely well for us was the day after we signed LOI, we were introduced to their entire integrations team. So this organization, dedicated function, dedicated business unit, because they had acquired 17 or 20 companies before us. So they were an engine, right? They knew, very professional. So we had a chance the day after we signed LOI to meet with C-suite and all the folks in integration, the VP of integration at the time. And they laid out a spreadsheet that was 1,700 rows long of step by step what needs to happen. And through the LOI process, we even had, because the assumption was we're making this deal happen. We're investing this time with integration now so we can run them in parallel. So not only did we sell the company and get through all the financials, we were also mapping client accounts, what the services look like, where they're going to live, how we communicate, the infrastructure that we had to migrate over from our systems to theirs, and all the other things that happened. So I think that was a big plus, where we had immediate connection with a well-defined integration process. The other acquiring potential companies we looked at, they didn't have as mature of an integration process that they could share with us. So there's some risk there, because then it's our reputation if this integration goes poorly with the customers we've had for so long. So we had initial conversations, and I think that was a game changer for us. Added a little bit of complexity and stress and work, but totally worth it, because after the day we signed, we were like 40% of the way done with integration once we signed the purchase agreement. And the next 6 months that followed, had we not done that, that integration process probably would have been a year long. So I think that was very beneficial. Having conversations early, assuming that this deal is going to close, and just making the investment in the integration time early on. What I think we as sellers could have done better, and everyone always talks about this that I've talked to from an M&A perspective, we could have been more organized and a little bit more upfront about some of the challenges we had with our customers, some of our processes, right? And not putting lipstick on a pig mentality. And I think some of that came to the surface as we go through and have to answer questions. We would say, oh yeah, that's just how it's always been done. I guess we could change it, right? So it wasn't anything on the acquirer. It was just, we were woefully unprepared for what a successful and professionally designed integration process looks like. But again, we weren't thinking about integration. We were thinking about, can we get to the finish line and sign the purchase agreement? We didn't have an advisor. We didn't have our focus on any integration work other than them helping us, and we just reacting to the things they were telling us.
Yeah, what a fascinating comment, though. The 40% of the integration was done when you signed the purchase agreement. I mean, part of the benefit I think that comes along with that is that then integration doesn't feel like a completely out-of-body experience. It's just an extension of the work that you've already been doing with this team.
And the integration work, the 60% that happened, Kevin, after we signed, that was the hands on keyboard. Let's start migrating systems, plugging things in, changing things. That initial 40%, discovery, understanding, sharing tribal knowledge, sharing context, knowing who the clients are, what their buying personality is, what are some challenges. And I think a lot of you that are listening to this, integration isn't just, we're going to cut things over, we're going to be done with it. No, there's a lot of understanding and context sharing that has to happen. There's a lot of information that has to be given. There has to be information that maybe doesn't exist, that has to be generated, packaged, and communicated. So that's when I say 40% was done once we signed. We shared all that knowledge of who we were and how we operated, with the assumption that we're closing this deal, right? Like there is no plan B where it steps away. And if the unrealistic probability that would have happened, that would have been, the minority percentage of, the deal making to get to that stage.
Right.
But that discovery was done in parallel with everything else from the deal making perspective, because it then allowed us, 2 weeks after the deal closed, when we came back into the saddle, to then start doing the hands to keyboard work and not starting discovery there, to just prolong the hands to keyboard to happen maybe 4 months after we signed the purchase agreement. So I thought that was very valuable. And I think, in the future, having integration integrated early on, even in the LOI process, there's some risk that a deal may not close. I think it's well worth the rolling of the dice, though.
Yeah, I like that. So we've come all the way back to the executive role that you then took on, where you were working for somebody else. So what was that like, going through that transition from running your own company to doing the integration to now you're a leader in a much larger organization?
It was emotionally, for me, difficult, because I was so accustomed to running 500 miles an hour, right? Very resourceful. I developed this lone wolf mentality where I didn't need to ask anybody for permission. I just did things, what I thought was fit for our organization, right? 15 years, long time. Only person I answered to was to our clients, right? So I didn't have to answer to anybody else. So emotionally, it was very difficult. I think from a structure and a capability standpoint, there was a big relief, because there were people in the organization that can help execute and do things on my behalf. So I had an opportunity to delegate much further, right? And things that had to be done. And they really helped me hone in. I'm a salesperson, right? I'm a growth guy. I convince people to buy things, even if they don't think they need it. So I was in more of a sales growth role to have supporting infrastructure around me to say, hey, we'll generate the lead information, we'll create the proposal, we'll show up and make sure the PowerPoint's functional, we'll do the screen sharing, we'll take the notes and send it out. Sagar, you just walk up like DJ Tiesto. You just walk up to the decks, do your show, and then walk out. You don't need to plug in anything. You don't need to do any of that stuff, right? So that was super, super impactful for me, because then I spent all of my time on my craft and not so much the minutia of operational requirements that follow when you do stuff like that. And ultimately I gave it a year, I gave it a shot. But for me, being a natural born entrepreneur, Kevin, we've talked about this. I got to be the builder. I got to be the leader. And, ultimately to a point where me having to report to somebody, it just wasn't natural for me. Right. So they gave me the opportunity, which I'm forever grateful. And I learned so much, left on really great terms. I think they're a great organization. Me personally, I got to be a builder, man. I got to be the lion out of the cage doing things on my own.
Yeah, no, that makes a lot of sense. I do wonder if there's a whole idea that you've been an entrepreneur and the way that you lead is through doing, and the energy that you bring and the vision that you bring, and then you move to another organization and there you have to lead through influence, right? And you've got to be comfortable with a different pace, but maybe a broader impact, right? And I wonder how many times people go through that either that coaching or that training process just to say, you can be successful this way, but you just have to lead in a different manner. For some people, I think that would work. But in your case, as you were saying, you've got to be the doer, right? So tell me a little bit about your new venture that you've started recently.
Yeah. So just really, really exciting time right now as of this recording in, late 2025. The world of artificial intelligence is just completely taking the world by storm. We started dabbling in AI, I'd say early 2022, late 2021, because we were a cybersecurity consulting company. Our clients were getting clobbered in the COVID world with security threats because everyone had moved to a remote workforce extremely quickly. So lots of organizations, there was a war on talent. There wasn't security employees or staff available to hire quickly. So a lot of our customers had come to us and say, Sagar, how can we use automation or AI capabilities to help augment some of our security defenses, right? This is 2021, maybe even late 2020. And we started having those conversations. How do we build automations in our security systems? How do we have self-healing and better reporting and actionable intelligence? And those same customers would come and say, great, we've solved some of that for security. Can we talk about this in HR or sales or operations? So the seeds for AI were planted a few years ago. Fast forward to today, ChatGPT was revealed a few years ago. Now everybody's talking about workplace automation. So the consulting organization that I started earlier this summer is essentially focused on helping mid-market and enterprise organizations first build a data and a security strategy, then develop an AI strategy, right? From automations to agents to digital transformation. And then from there, we actually are the implementers as well. So we're a full stack agency. We'll go in and we'll plug in AI intelligence into your existing software, build something new, really help you reimagine how you work. Because the era in 2026 is not so much, hey, we're doing things a certain way, let's try to retrofit AI into it and maybe we can get some good results. And you know this well, it's more so, how do we re-architect how we operate so it can be AI first? And there's just a tremendous amount of opportunity happening in companies of all sizes. And we're just the shovel guys here trying to help organizations take advantage of the change.
I love the starting point though, the idea that you've got to get the data and the process right as a foundation before you can move any further. I mean, the number of clients that I see where it's, well, let's go and sprinkle some AI on this and it'll make it better. Some of the hard work is the stuff that you've maybe not done in the past, which is I've got to have durable, high quality, consistent data that I'm going to use, and I've got to have some level of consistency and maybe even written processes so that I can go and execute or make it faster. You've got to get that foundation before you move forward.
It's the oxygen, and every company we talk to are strict qualification requirements, Kevin.
Yeah.
You know where your data resides. Can you articulate your process? And do you have cultural alignment? I have a book coming out in January. I have a podcast as well. Can't wait to have you on it in the future.
Fantastic. I'm looking forward.
A really, really important thing in conversations I've had thousands of AI conversations over the years with people, companies of all sizes. And the number one thing that I see, Kevin, is folks want to spend money on the shiny tech and all the implementation, but they don't ask their teams their fear and their why around the AI usage. So not only data and process, but you have to have alignment. And from an EOS perspective, followed by all, right? You have to have that mentality. Only if those are achieved and we can verify, then we're ready to have an automation, digital transformation, AI conversation. If you can't meet one of those three, we got to have some change management conversations first. That may take a month. It may take you a year, but that's the precursor to have any type of successful AI output. And I get sad when I read articles from like the MIT that says 95% of AI rollouts are failing and they're not getting adoption. They're measuring the wrong thing. They're measuring output individually and not looking holistically at the organizational level and people's perspectives on these tools. So I think some of that stuff, that pre-work is really, really important.
I think that's right. The MIT study, I think, is an interesting one, just in terms of when you dig under the surface of that one. There's actually a lot of great insight into, and this is how you make it successful. It's not a bleak story, I don't think. I think it's one where here's the path for you to be able to go and make a difference using AI. So
absolutely.
I want to thank you for your time today, Sagar. This was a fantastic conversation. And the thing that I loved about it was that for all of the changes that are going on in the way that business operates and with AI these days, the vast majority of what we talked about today, I think, is going to be durable. I think you could listen to this in 3-5 years, and it's going to be insightful at that point as well. The only piece that probably isn't going to be is that the Chicago Bears are playing really well. So this is just a point in time.
Just a point in time, my friend. Kevin, I appreciate it. Thanks for the opportunity. Look forward to chatting more about the change in the world that we're living in right now. And just grateful for the time, man.
Thanks very much, Sagar.
Appreciate it.
Thanks for tuning in to the Mid-Market Edge podcast. For more information, visit the Mid-Market Edge website at midmarketedge.com. Details are in the show notes. Remember to subscribe and like the show so you'll never miss an episode. And until next time, keep building your edge in the mid-market.